Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. So in the weekend we have specified what particular we intend to do and to understand what direction market could fall, and we have talked about market retracement and specified particular fib levels that have to become some indicative areas that market should not break down. Unfortunately or unfortunately, but you could see what has happened. So right on Monday, gold has dropped and actually broken a few levels. And currently, based on the performance on intraday chart, situation doesn't look really very impressive and attractive, at least for a long position taking. If we keep aside any scenarios with some geopolitical surprising factors that are totally out of our control, then based on the technical picture, there's really a few reasons to consider long entry. First of all, if we take a look on the daily chart, I already talked about this. Overall picture looks bearish, so because we have collapse and the flag consolidation. This flag consolidation already is lasting more than a week, so this is rather extended. And if we suggest that market intends to keep going with this upward direction, well, it's probably, in most cases, this happens faster. If market stands too long time in sideways action and doesn't continue upward performance, so it triggers some really worries and doubts, concerns about this action. So that's what we have on the daily chart. Although formally we have bullish trend by the MACD, and in fact we have this some kind of the engulfing pattern that we already talked about previously on the weekly chart. So by nominal view, the bullish context hasn't broken yet, but the signs that we see here are not really inspiring us for taking a long position. On the 4 time frame chart, trying to take a look in general on overall picture, you can see what is going on here. So if we consider this in the shape as a shape of the head and shoulders, this performance on the bottom arm, it's a little bit bearish. It's not normal, especially after so strong upward action. Usually bulls have to control the right part of the pattern as bears control the left part, but we do not see here any kind of the control. It's very choppy, slow, and heavy action, mostly suggesting some possible downward continuation. That's once again, if we're not considering any unexpected driving factors that may appear on the gold. I am speaking only on the situation that we have here. Of course, if something will blast here somewhere, and will have the big resonance in geopolitics arena, of course the trend on the gold market could change. So this is obvious. So we just do not consider these moments. Finally, what we have on the hourly chart. On the hourly chart, it's very interesting the action that has happened on Monday. If you remember, we said that keep an eye on the confluence, 2640 area. Normally, bullish market should not break it, especially once it will break it, erasing this thrusting action to the upside is first moment, and actually starting point of the after the holidays. This is after the Thanksgiving. And take a look, here has been formed minor bearish reversal swing. So here you have swing down greater than the previous swing up. Yes, once again, formally, this ABCD pattern is not erased yet. But based on the overall action that we see here, personally, I do not want to take any long position on gold market right now. So let's take together what we have on the daily chart. Collapse on the flag, which is a bearish flag. On the 4-hour time frame chart, too slow action on the right arm, not to the collapse, it's not normal. On the hourly chart, inability to complete the OP, early reversal, drop through all confidence on Monday, forming the bearish reversal swing. So all this stuff together makes me just stay aside. If you still would like, for example, take the short position on the gold market, in this situation it would be better to wait for some patterns that you would like to get. So for instance, what particular patterns you could consider? Obviously, the first pattern that you could think about is a potential butterfly, right? So it might become the left wing of the butterfly, that might become the right wing. But the problem here is that invalidation point of this butterfly is too far. So it stands above this area. So while market will floating around this level, this range, butterfly potentially is possible. It means that you will have to find some compromise, to not just placing stop right there. What the compromise might be? Maybe you will wait for some particular minor pattern here. For instance, if you will get Gartley steeple to sell, in this case it will be relatively safe trying to take the short with the placing stop just above this area. So it will be very small short. If market will jump up, well, who cares? So this will be very small loss. You will minimize the potential loss with the 3-2 pattern. But if even minor retracement will happen, you will be able to move stops to the break-even and see what will happen next. Another pattern that you could consider, but in this case you will have to foresee it. Particularly here, it also might be the butterfly. So you could see that this might become left wing, right, is forming right now. That might become starting point of right wing. This advantage of this is also very tight stop, so you will have placed just above this area, hoping that it will be downside continuation. Very small potential loss. Unfortunately, here you will have to anticipate this pattern significantly because you do not have even some clear shape of it. It's just suggesting. These are kind of the things that you could take into consideration if you would like to trade today, but at least, if even not to take the short position, but at least it would be better currently to not take any longs based on all these factors that we have just discussed.